Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Matt, the mortgage guy, expert on the channel, contributor to the course, and just an amazing human being and a great dad. And also he completed a marathon here recently, just throwing that out there. I'm just saying, something I haven't done.
We might not want to talk about it. I have only ran about 6 miles since December. So
they can never take that away from you. But what I wanted to talk about today is I mentioned on my daily financial news earlier in the week, I think it was Tuesday or yesterday, the day before, you sent me a text and you're like, oh my God, rates are shooting higher. So let's talk about it. Just how high have rates moved? Have you ever seen anything like this? This is, and frankly, I don't think it's over, but you're the expert. So what's going on?
Right. Yeah. And I think that's the problem, is the speed of the increase, right? Everybody, who follows it and has a level head is like, hey, listen, higher interest rates are healthy. This is not that big of a deal. We still got great interest rates, but to go like shift so fast has been the problem, because literally somebody looks at a scenario and then a week later, that same scenario cost them an extra $7,500. Like that is the real issue. And I'm not making that $7,500 out of thin air. I literally had somebody lock in a cash out refinance on a triplex. And just for fun yesterday, I'm poking around and I can reprice to see what today's price is. And I'm like, holy cow, it's 1.5 points more expensive for that $490,000 loan. If we wouldn't have locked in 7 days ago, he'd be paying an extra $7,500-ish for this rate. So the speed at which rates are moving is what's scaring people. I spoke at a real estate meeting yesterday, and when I got up, I'm literally presenting rates, and that they have a mortgage person present rates to the group, talk about a finance forum we do once a month and invite them to that. And I just got up there and I said, rates are fine. Inventories, everything's fine, jokingly, and the room erupts in laughter, which was like, the nervous laughter.
Yeah.
When you can tell people like, I'm laughing, but I really want to cry. It's tough, and it's tough for buyers. The problem that I see with rates moving up this fast, and this is exactly what I spoke about in this real estate meeting yesterday, is one, you've got people walking around with invalid pre-approvals. They think they're pre-approved at 400,000, but if they did that 60 days ago and it was based on 3.5, we are nowhere near. We're at 4.5, right? So that person might not qualify. If they do qualify, Mike, what some people are going to run into is you submit an offer. They're like, oh, great, I got an offer accepted, Matt. What's the next step? And we talk about initial disclosures. They see what that loan looks like now, and they're like, I thought my payment was going to be $2,100 a month. Well, it was at 3.5. Now it's going to be $2,475. And then they get a little bit of, sticker shock, probably some cold feet, and they're more apt to back out. So I'm imploring everybody, and this is what I talked to real estate agents about yesterday, make sure that we're reminding folks, check in with your loan officer, whether you're looking at investment properties or primary. You want to know what today's scenario looks like. It probably is in your best interest to look at maybe even a range. If what I'm looking at today is 4.5, and that translates to a $2,400 payment, like know that it might flex up or down $100. And truth be told, it's much more likely to flex up, right? To go down is probably wishful thinking, right? We all know that rates are trending upwards and will continue to do so based on our boy Jay Powell and all the plans he has. So it's a wild world out there. It's really close. If you look at like Mortgage News Daily or some of these others that take like a national average, we're really close to being 2 percentage points higher from August of 2021, which was only 7 months ago.
Yep.
So 2.6 to 4.6, a full 2% increase in the rate.
Yeah. So there's a couple of things I want to say here. Let's give a plug for where you want people to go right now. Where do you want them to go?
Yeah, for sure. Go to greatmortgagebroker.com, get in touch with the team. We'll get you fully dialed in. Whether you're, buying your primary residence or you're buying investment property, do yourself the favor of educating yourself first. Get yourself pre-approved, see what the payments look like. It might turn out that you don't end up buying, but it's better to be in the position to be prepared for an opportunity that doesn't happen than have an opportunity come by that you're not prepared for.
Yeah. So definitely do that. Again, if you've been doing something 60 days ago, the numbers are different. And this is why last Wednesday I called it. It was the shift that I've been waiting to find. buyers, owner occs, are going to increasingly back out and increasingly not write offers. Because I've said it since Greg Dickerson and I, my Monday expert, have been kind of debating on what rates do the real estate market stop. And I've said, and you can go back and look at the playlist, if rates go from at the time 2.6 to 5.6, but they do it over a 2-year period, owners and all of these people will adjust because it will move slowly, and you will have wage inflation that dents the increased payments. However, if you had rates suddenly shoot up, which I said I thought was going to happen, the market's going to freeze. It is what is happening today in the owner occupied market is exactly what happened to flippers in March of 2020. If you guys do not recall or do not remember that time frame, flippers were running high on the hog in January of 2020. Non-QM lenders were everywhere. Hard money lenders were everywhere. You can write offers and close in 30 days. Then the pandemic, then we shut the economy down. There were no loans initiated, and many were pulled at the last minute for 60 days. It froze. We are seeing that today in the largest part of the market, which is owner occupants. Owner occupants, based on February numbers, John Burns Real Estate Consulting, is 67% of the market. That 67% is frozen. Flippers, if you were in the business, it hurt, but that's like 2% of the market.
Yeah.
We are frozen. Yes, deals will still get done. Yes, people will still buy, but it is drastically different. And you brought it to us first last week, and I think it's only continuing because rates are up from last week. I mean, heaven's sakes.
Right. Yeah, for sure. I mean, rates are probably up a quarter from last week. And
that's crazy.
I think, I'm not sure who it was, if you were talking to Omar or somebody, but you also talked about, the move up buyers are a little bit, nicer price point. If you think about some of these rate shifts and what it means to a payment at 500 grand, I've got real estate agent friends and loan officer friends in LA, or, San Jose, San Francisco type areas. Mm-hmm. Jumbo rates have done the same thing, right? And so these payments, Mike, have gone up $1,200, $1,300, $1,500 a month. And I know, because I have the conversations, some of these folks can upgrade and would upgrade, but when they look at it and it's $1,500 more than it was when they were already kind of thinking to themselves, maybe we're fine where we're at. Now it's like, I'm not going to bother, right? So demand on the top end, I think for sure is going to see a big hit too, because a lot of times the demand at the top end is it's a luxury thing. It's not a necessity thing.
Yeah.
Entry level, you got to have a place to live. Luxury is like, do I upgrade from 700 to 1.2?
Yeah, I totally agree. And I said this, Omar and I did an A-B series yesterday. A was, if you're 2X the median, be careful. But if you're a first-time home buyer, like that's where you're competing below the median, it's 75% the median, that market's going to stay on fire. Because again, homeowners, just sure, first-time buyers, maybe half of them are out, but the other half's still there. And you still have the investors. It's still highly competitive, and builders aren't adding inventory. So yeah, I think it's going to be the tale of two markets. Rates are up, man. I tell you, I live in the Bay Area. You look at somebody that was going to get a 2.7 or 3% loan, and now it's almost 5%. That payment on $1 million is gigantic. And just because you can, a lot of people, I actually talked to somebody yesterday. He's like, Michael, we were going to buy, we're just going to rent because the payment jumped so much. So yeah, the market's going to slow down.
I agree with you 100%. And I'm all for it. I've got 100 plus pre-approved clients that are, just eager to see some more inventory, see a little bit of, slowdown of demand, and the ones that are, really motivated to buy are going to have an easier time doing it in Q2. I'm confident in that.
Absolutely. So folks, again, if you're one rental at a time fan and you still get those cheap mortgage loans, which I can't, but many of you can, how do you want them to reach out?
Go to greatmortgagebroker.com. Quick 30-second form. Let us know where you're at, how we can help. We'll be in touch.
All 50 states. Go get it. Thanks, buddy.
Thanks, Mike.